All right, everyone, welcome to week 14 of selling weekly lottos. Every week, I sell what's the equivalent of lottery tickets to gamblers in the stock market, and that's how I make passive income. All right, every week, we got the disclaimers. Number one, all my positions are covered. I sell covered calls and I sell cash secured puts. I don't use margin and I don't sell naked calls or naked puts. Number two, I'm happy to sell the shares or buy the shares if they're assigned. If my covered call goes past the strike, take my shares. If my cash secured put go back beyond the strike, let me get those shares. All right, I'm totally cool with it. I want them. Okay, and then number three, this is not free money, guys. Some people think this is free money. I don't consider it free money because there's a risk, and that's why you're getting paid this premium, because you're taking the risk. All right, all investing carries risk of losses. All right, that being said, this week's winner is me. All right, $1,536 using $132,500. All right, let's take a look at the positions. Number one, boom, UNH 300p, sold it for around $300, bought it back for $150. That happened the next day, so it's just like, hey, this went down by 50% the next day, so let me take these profits. I could have made more, which I'll talk to you about later. All right, number two, boom, Robinhood. Like I said last week, I'm starting to really like Robinhood stock because their premiums are really good, and I think the company's doing pretty good. These I sold 100 puts, okay, 300 each, total 900, and I bought them back in total for $75. All right, and then the third position, boom, AMD 145p. Sold this. I sold 5 of them for around 720 total, and I bought them back for around 200. All right, so total was $1,536 in premium obtained this week. All right, so let's take quickly look at my benchmarks. Bazam! All right, not very many changes this week, guys. Now that it's week 14, unless I drastically change my trading pattern, these averages aren't really going to change much. The main thing I'm focused on is trying to reduce my average risk while maintaining income and keeping that buffer level, that breathing room that I have every week to not lose all my gains. All right. Let's talk a little bit about opportunity cost. Okay, one of the main reasons people don't really like this strategy is the opportunity cost that you take to not make even more money. So all three of these stocks that I sold puts on last week, they pumped like crazy. UNH went from like 310 to 350. Robinhood went from 100 up to 120. AMD went from like 150 to 165. So if I took that entire collateral, that $132,000 that I used to sell puts, and I just bought the shares instead, I could have made somewhere between $5,000 and $10,000 because they pumped so hard. But because I sold the puts, if they expired worthless, the maximum I could have made was $2,000. So people are wondering, why would I do that when I could have made a lot more by buying the shares? And the answer to that is because I don't know that they're gonna pump, guys. I don't know that they're gonna go up 10-20% in a week. The trade-off I'm taking, the compromise I'm doing by selling puts is I'm not gonna lose as much if they go down. So everybody always talks about, oh, you could have made $5,000 to $10,000. Well, what if they went down? Then I could have lost $5,000 to $10,000. But with selling puts, I have that little bit of a breathing room there. The price is here, and the price has to get down here before I start losing. All right, that's what I'm looking for. I'm looking to not lose. That's my goal. I want to not lose, and that's why you've seen me the last 14 weeks win 13 out of the 14 weeks. Right? That's another compromise you're taking. That's a big trade-off. You're not going to make as much, but you're going to win more often. That's why this is a slow and steady strategy. There are people out there that can take my average risk of $130,000 and make more than I have in the last 3 months in just a day or a week, right? But they're taking a big risk if it goes down, and I'm trying to avoid losing. So that's why I chose to sell puts. All right, was I looking at the stock and saying, crap, I should have bought the shares? Yeah, okay, everybody does that. Anybody who says, oh man, they don't care if they didn't make more money, they're lying. Okay, yeah, I definitely looked at that UNH and said, crap, I should have bought those shares, man. But I'm pretty happy with the premium I gained and consistently making money every week as passive income. So yeah, so if you're concerned about the chance of not making as much, then probably writing options, selling options, theta gang strategy might not be the best thing for you. All right, but if you want to just make a consistent weekly high chance of making income, then this is a great strategy. All right, guys, not much else to talk about this week, so see you for week 15 next week. Peace.